students, this is Dr. Mercado again. Welcome back to Accounting 2401, Principles of Financial Accounting. And we are continuing covering Chapter 1, which deals with the Introduction to Accounting and Business. And the specific problem that we are going to be covering in this lecture is Problem 1.3a, which deals with the preparation of financial statements, okay? Like I stated before, it's very important that you read the chapter before you attempt any of the assignments. Now, you will find something similar to this on your exam. Students need to learn how to prepare financial statements, okay? So you're going to have something similar to this on your upcoming test. So it is very important that you clearly understand how to complete each of the financial statements, okay? Now, there is a lot of useful information in the book. I'm not going to cover all of this. Make sure that you do go back and read. But we do have 4 financial statements that we prepare. The financial statements are prepared after all transactions have been recorded and summarized. And then the primary financial statements include the income statement, the statement of owner's equity, the balance sheet, and the statement of cash flows, okay? And the financial statements need to be prepared in the specific order, okay? Why? Because we use information from one financial statement into the next, okay? So they do have to be prepared in this specific order. The income statement goes first. The income statement is basically just a summary of the revenues and expenses for a specific period of time, such as a month or a year. The statement of stockholders' equity is a summary of the changes in stockholders' equity that has occurred during a specific period, such as a month or year. Then we have the balance sheet, which is basically just a list of all of your assets, liabilities, and stockholders' equity. And it's usually done at the close of the last day of a month or a year. And the statement of cash flows is a summary of the cash receipts and payments for a specific period of time, such as a month or a year. Now, I've worked in industry before, and we would prepare financial statements. I used to work for a bank. We would prepare financial statements daily, okay? And of course, we had to prepare financial statements daily because we need to make sure that we understood and we're informed of all of the balances and all of our accounts on a daily basis. Now, at the end of the month, we will prepare our end of month financial statements, which were very important. We had to make sure that we did all of the necessary accruals, pay everything that needed to be paid for that specific period. So, monthly financial statements are critical. Those are basically used for analysis purposes. And then, of course, we have our end of year or our closing financial statements, okay? So, this is an illustration that you can find in your book, Exhibit 9, and it basically shows the flow of information from one financial statement to the next, okay? So, the income statement shows your revenues less your expenses, and that will give you your income. The income that you calculate will be included, so that number in your income statement is going to flow into your statement of stockholders' equity, okay? That number is wrong, then everything from that point forward will be wrong, okay? In accounting, we cannot make mistakes, okay? One mistake in one area will affect and trickle down to the rest of the information, and then everything will be wrong, okay? So it's very important that when we are working on our information, that we are as accurate as possible, okay? So the net income flows into our statement of stockholders' equity under the net income section of the report, okay? Then you complete the statement of stockholders' equity, okay? And then the total stockholders' equity calculated, that number right there, that $26,050, that total is going to flow into your balance sheet, okay? So whenever we pick up the total stockholders' equity, that number is coming from your statement of stockholders' equity, okay? And then when we prepare our statement of cash flows, that ending cash balance, that is coming from your balance sheet, okay? So as you can see, the information from income statement flows to the statement of stockholders' equity. Information from stockholders' equity flows into information from the balance sheet, and information on the balance sheet flows into your statement of cash flows, okay? And we are going to go slowly right now through the process of preparing the 4 financial statements, okay? So, income statement, like we stated, it's the simplest of all the financial statements. It's basically where we calculate our net income, our profit, or our earnings, okay? If our expenses exceed our revenues, that is referred as a loss. We don't want to have losses. If we have continuous losses, we have to identify what is causing us to have a loss. Either we have too high of expenses or we are not generating enough revenues. Okay, so an analysis would have to be performed. Okay, so basically the income statement reports the revenue and expenses for a period. Okay, next we have the statement of stockholders' equity, which reports the changes in stockholders' equity for a specific period of time. Okay. It is prepared before the balance sheet because the amount of common stock and retained earnings at the end of the period is reported on the balance sheet. Okay. The balance sheet basically includes your assets, liabilities, and stockholders' equity in a vertical format, and it ensures that the accounting equation has remained in balance. Okay. And then we have the statement of cash flows. Basically, the statement of cash flows engages three types of activities that affect cash. We have operating activities, investing activities, and financing activities. Okay, so under the operating activities section, it basically reports a summary of cash receipts and cash payments from operations. That is the key. Anything that you received or paid as a result of the business operations goes under the operating activities section. Okay, the net cash flow from operating activity normally differs from the amount of net income for the period. Okay, the difference occurs because revenues and expenses may not be recorded at the same time that cash is received from customers or paid to creditors. Next, we have cash flows from investing activities. In this section, we report the transactions for the acquisition and the sale of relatively permanent assets. Okay, and then cash flow from financing activity. This section reports the cash transactions related to the cash investment by stockholders, borrowings, and dividends. Okay, so as we prepare these financial statements, it's very important that you understand what flows into each of them, and all of the information is on your book. So what do we need to do now is read. Okay, so make sure that you've read all of the sections related to the financial statements before you begin working on your financial statements. Okay, so now let's jump over to the actual problem that we're going to be completing. Like I stated, you will have something similar to that on your test. So it's very important that we understand how to do this. Okay, so the problem reads: Seth Fay established Reliance Financial Services on July the 1st. Reliance Financial Services offers financial planning advice to its clients. The effect of each transaction and the balances after each transaction for July follow. So they give you everything. They've done all the work for you, and you've got the ending balances and the different transactions that occurred during the month. Okay, so we are required to prepare an income statement for the month ended July 31st, a statement of stockholders' equity, a balance sheet, and a statement of cash flows. Okay, so we have to prepare the 4 financial statements. Okay, so let's begin with the first financial statement that we have, which is our income statement. Okay, and in our income statement, we include 2 things: revenues and expenses. Just remember that 2 things go into your income statement: revenues and expenses. Okay, so we're going to go ahead and we're going to look at the information provided, and we're going to start off by identifying or locating my revenues. Okay, so revenues fall under stockholders' equity. Okay, and your revenues in this case are fees earned because we provide a service which is financial planning advice to clients, and we charge a fee for that. So my revenue in this case would be my fees earned, and according to the problem, my fees earned were $144,500 for the period. Okay, we're always going to be looking in this particular case at the total. That gives me the total. So we charged $110,000 at the beginning, and then towards the end we charged $34,500, giving me a total of $144,500. So that is the revenue that we generated based on our fees earned. Okay, now we have 2 columns. Okay, on the first column, if we have multiple items, we're going to include them in the first column, add them, and take the total to the second column. If we only have 1 item, then you just take the total to the very end. If we look at this account, we only have 1 revenue account, which is my fees earned. because we only have one account, we're going to take that to the end, and that would be 144,500. Okay. Now, we said we had two things that were posted in our income statement: revenues and expenses. So now we're going to bring in all of our expenses. Okay, and let me go ahead and type them out first. We have salaries expense. We have rent expense. Anything that has the word expense is basically an expense. We have auto expense. We have supplies expense. And we have miscellaneous expense. Okay. And we're going to go ahead and we're going to pick up all those numbers from down here. Okay, from your total. Okay. So we're going to pick up those numbers. And because we have more than one expense, I'm going to put them in my first column. Okay. So salaries expense is 55,000. Okay. Then we have 33,000 in rent expense. We have 16,000 in auto expense. We've got 4,500 in supplies expense. And we've got 4,800 in miscellaneous expense. Okay. So now I can calculate my total expenses. How much did I spend in the month in expenses for operations or operating my business? So I'm going to go ahead and I'm going to add all those together. So I'm going to add them all up. And my total expenses is $113,300. Okay. So revenue minus expenses. Okay. It's revenues minus expenses will give you your net income. Okay. So I'm going to go ahead and now we're going to figure out our net income. Well, first we have to look. Remember, if revenues are greater than expenses, then we've got net income. If expenses are greater than revenues, then we've got a net loss. Okay, so in this case we have to look at the numbers. My revenues are 144,500. My expenses are 113,300. So which one's larger? My revenues. So if your revenues are greater than your expenses, then we know we're going to have net income. Okay, so it's revenues of 144,500 minus my expenses of 113,300, and that's going to give me net income of 31,200. Okay, so the income statement is done. Revenues minus expenses will give you your net income. Just make sure that you're picking up the numbers from your total, from your last balance. Okay, so that's pretty straightforward. Now we're going to move on to the statement of stockholders' equity. Okay. Now for the statement of stockholders' equity, we've got our common stock section, our retained earnings section, and our total. Okay. So we're always going to begin with our beginning balances. Okay. Our beginning balances as of July 20, Y2. Okay. Now in this problem, it says that we established the business on July the 1st. It's a brand new business. Did we have a balance in our statement of stockholders' equity? Did we have a balance in our stockholders' equity account before July 1st? No, we didn't. We didn't have a balance because it's a brand new business. So what did we start off with? We started off with $0. Okay? And then what happened during the month? During the month, we issued common stock. Okay? How do I know that? Because let's look at our common stock section. The first transaction is we got common stock. We issued common stock of $50,000. Okay. So during the month, we issued common stock of $50,000 right there. So under my common stock section, I'm going to go ahead and I'm going to include the $50,000. Okay. And I'm going to bring that to my total. How much did I issue in common stock? That was $50,000. Okay. Next, I'm going to go ahead and I'm going to bring in the net income that we generated during the month. Okay. Now, where is that number coming from? That number is coming from your income statement. So your net income is coming from your income statement. Okay. Let me go ahead and put an arrow. So this number is going to go over here, okay? So your net income, it's going to go under your retained earnings section, okay? So how much was my net income? 31,200, okay? So the total of my net income is 31,200, okay? Then, did we pay out any dividends, okay? In this particular section, we have to look at all of the accounts under the stockholders' equity umbrella. We've got common stock, we've got dividends, revenues, and expenses. Now, the revenues and expenses were used in the income statement to calculate your net income, which is what we're using in that second line item, net income. So my revenues and expenses have been accounted for in my net income. My stock has been accounted for. The only other thing I need to account for is for my dividends, okay? Did I pay out any dividends? And according to the problem, we did. We paid out $15,000 in dividends, okay? I like to mark them off, that way I see what I've used, okay? So I have dividends of $15,000. Dividends affect my retained earnings balance, okay? So I paid out dividends, so that means my stockholders' equity decreased by $15,000, okay? So my total will be $15,000, and it's a deduction because dividends decrease, okay? Common stock increases. Net income is positive because we have income. If we would have had a loss, then we would have net loss, and that number would have been a minus, okay? If you have a loss, it's a deduction. If you have income, it's a positive number. Dividends are always deducted, so you'll have a minus sign, 15,000, okay? So now we can calculate our ending balance. So it's our balances as of July the 31st, okay? So my balance for common stock, I'm just going to basically add all of the information in the first column. That gives me $50,000, and I'm going to bring that over, okay? So for my common stock, I've got $50,000. For my retained earnings, I've got $16,200, and my total is $66,200. Okay. So let me just format there. That's very good. Okay, so that number, that's the $66,200. We're gonna use it in our balance sheet, okay? So remember, that number that we calculated right there is going to get used up in our next financial statement, okay? So our statement of stockholders' equity is complete, okay? We've broken it down between stock, retained earnings activities, and we've brought in the information from either the information provided in the problem or our prior financial statement prepared. Next, we have our balance sheet. Our balance sheet includes our assets, our liabilities, and our stockholders' equity, okay? So we're going to begin with our assets, okay? So we're going to bring in anything that is an asset, and we have 3 asset accounts, okay? So we're going to bring in our cash, our accounts receivable, and our supplies, okay? So we're going to bring in the balances on these 3 accounts, which are our asset accounts. Okay, so assets, we have cash, accounts receivable, and supplies. And then we're going to calculate our total assets. Okay, because we have more than one account, we're going to do the addition in the first column, and then we're going to bring the total to the end. Okay, so we've got cash of $32,600, accounts receivable of $34,500, supplies of $2,500. Okay, so my total assets are, let's see, underline, we're going to add them up. So my total assets are $69,600. Okay, that is my total assets. Okay, now we have our liabilities. Okay, our liabilities, and we only have one liability. We've got accounts payable. Okay, we've got our accounts payable, of $3,400. Okay, so we only have one account, which is our accounts payable. And we only have one account. We're going to bring that over to the very end. That's $3,400. And then we have our stockholders' equity. Okay. Let me see. Let me format this over here. Okay, so under stockholders' equity, we have two components. We have common stock and we have total stockholders' equity. Okay. We always have two things, and then we can calculate our total stockholders' equity. Okay, so common stock. How much common stock do we have? Well, looking at here, we have common stock of $50,000. Okay, so we've got common stock of $50,000. Okay, and then we have our retained earnings of $16,200, which give us a total stockholders' equity of $66,200. This is coming from your statement of stockholders' equity. Okay? So these figures are coming from your statement of stockholders' equity. We've got common stock of 50, retained earnings of 16.2, and a total of 66,200. That's my total stockholders' equity. Now I can figure out my total liabilities and stockholders' equity. Okay? So I'm going to add my liabilities plus my stockholders' equity, and that's going to give me that number. Okay? Remember, per the accounting equation, your total assets need to equal your total liabilities and stockholders' equity. Okay? So that number and that number need to be the same. If they're not, your accounting equation is not in balance. Okay? So make sure that you pick up the correct numbers and that you are in balance. So this is the completed balance sheet. It includes three sections: assets, liabilities, and stockholders' equity. Okay? And then last but not least, the problem asks for an optional statement of cash flows. In the future, we are going to have a chapter that completely is focused on the statement of cash flows because they are difficult. Here, it's a very light level example, just so we are introduced with the statement of cash flows, but in the future, we're going to learn about this more in depth. Okay? So the statement of cash flows, if we recall, are broken down into three sections: the operating activities, the investing activities, and the financing activities. The first area deals with operations. Okay, so the section summarizes any cash receipts and cash payments from operations. Okay, so let's go over here and let's start working. Okay, cash flows cash flows from or used for operating activities. Okay, so the first thing we have is, did we receive any cash from our customers? Okay, so here it's going to be a little bit more complex because we have to dig through the information provided. Okay, now they're asking us, did we receive any cash from customers? Okay, so we have to focus on the transactions that affect cash. Okay, and if we receive them from our customers, that means that we should have performed a service. Okay, so the only way that we would have received cash from our customers was we provided a service and they paid us, right? So we find here in transaction D that we earned fees of $110,000 and we received cash of $110,000. Okay, that's the first item that needs to be included. If we continue going down, we see that we charged fees of $34,500, but cash was not affected. Why? Because we didn't get paid. These people owe us money. Okay, so this is not going to be included because in the statement of cash flows, we only include transactions that affect either cash being received or cash being paid. So the only cash that was received was that $110,000 right here. That was the only time that we received a payment from our customers in cash, $110,000. So we're going to put cash received from customers, and we received $110,000. Okay. Now, cash paid for expenses and to creditors. Okay. So now we need to figure out all of the transactions that affected cash where we paid a creditor or we paid expenses. Okay, so let's see. We have a deduction there of $3,600, so that means we paid cash. What did we pay for? We paid a creditor. We owed money and we paid them $3,600. So those $3,600 have to be included. Okay, so those $3,600 are going to be included. Okay. And then here we paid $33,000 and we paid that for rent. So that's also going to be included because that deals with the operations of our business. Okay. So then that $33,000 for the rent also needs to be included. Okay. Then here we paid $20,800 and that was for auto expense and miscellaneous expense. That is also for operations. So we're going to include those $20,800 as well. Okay. Anything that we paid for either paying a creditor or paying our bills or our expenses need to be included in this next section. Okay. Here we paid $55,000 for salaries. Those are also for operations, so we need to include those $55,000 there. And then down here we paid $15,000 to dividends. Dividends are not included in the operating section. Those go in another section, okay? In the operating section, we only include payment to our creditors or to our expenses, okay? So we're going to add those numbers up. So we've got $3,600 that we paid our creditor, and then $33,000 that we paid for rent, $20,800 that we paid for auto expense and miscellaneous expense, and then $55,000 that we paid for salaries. So that gives me $112,400. Okay, so that is cash paid for expenses and to creditors. So we calculated, how much did we calculate? Let me do the math again. Me forgot. Let me see. So it's 3,600 plus 33,000 plus 20,800 plus 55,000, 112,400. Okay, so because we paid money, this is going to be a deduction of 112,400. Okay, and it's a deduction because anytime you pay cash, we deduct our cash balance. Okay, so those are the two things that impacted. We're going to go ahead and we're going to do our net cash flows used for operating activities. Okay. And we're going to add those together. Okay, let's see what we get. So we get a minus $2,400. So we paid more for expenses and to our creditors than we actually generated or received payment from our customers. Okay, that's the first section. The next section we have is cash flows from or used for investing activities. Okay. So under investing activities, okay, we have reports the cash transactions for the acquisition and sale of relatively permanent assets. If you buy a car, if you buy a piece of equipment, if you buy furniture, permanent assets, assets that are going to belong you long term and belong to the company. Now, based on the information that was provided to us in the problem, it makes no mention of any acquisition of assets. So that is going to be a 0. Okay, so I'm going to just go ahead and I'm going to bring that number down and make it a 0. We did not have any investing activities. Okay, cash flows. Let me make that correction right here. That way they're all the same. Okay, so cash flows, okay, from or used for financing activities. Okay, so financing activities. Okay, so let's go back and let's review the book and let's see what financing activities says. This section reports the cash transactions related to the cash investments by stockholders, borrowings, and dividends. So if there was a cash investment, meaning we issued stock, it'll go there. If we borrowed money from a bank, it goes there, and any dividend payments made. Okay, so did we issue any stock? Yes, we did. We issued $50,000 in stock. So we have cash received, and we issued stock, and we received money in return. The effect to the transactions, to all of these transactions, have to impact cash. That's why it's called the statement of cash flows. The transaction needs to offset the cash account. So when we issued common stock, what did we get? We received cash. We, the business, got cash. So we have cash received from issuing common stock. And how much did we get? We got $50,000. Okay, where am I getting those $50,000? From the common stock section. Okay. Did we pay any dividends? If we look at the problem, it says the dividends were paid of $15,000 in cash. Okay, right there, in cash. So common stock, let's look at this. Common stock, when we issued common stock, what did we receive? We received cash. Okay. When we paid our dividends, what happened to our cash? Our cash decreased. You see, right here, cash decreased when we paid dividends. So dividends were paid, excuse me, and cash was paid. Okay, how do we pay the dividends? With cash, $15,000. So those two transactions right there, in the cash column, remember everything has to affect cash. Those are going into your statement of cash flows. Okay, so cash paid for dividends, and because we are paying cash, it will be a deduction, and we paid $15,000 in dividends. Okay, so now we can calculate our net cash flows used for financing activities. Okay, and we're going to add those two together. Okay, and that gives me $35,000. Okay, so now we can calculate our net increase in cash. Okay, and to do that, we're going to add your total for net cash flows for operating activities. Basically, you're going to add your total for your operating activities, your investing activities, and your financing. Your totals for those three are going to be your increase. I'm going to add the three numbers together, and that's going to give me an increase in cash of $32,600. Okay. Now we're going to balance this over. Okay. So we have our beginning cash balance as of July the 1st. Now remember, this is a brand new business that started on July the 1st. Before any of these transactions took place, did we have any cash available? No, we didn't. We didn't have a cash balance because we didn't have a business. Okay, so now let's figure out our cash balance at the end of the month. Okay, so we're going to go ahead and we're going to add our increase in cash plus our beginning balance, and that's going to give me a cash balance at the end of the month of $32,600. Now that number right there, that $32,600, needs to equal to this amount right here. Okay, that's the amount of cash that we reported in our balance sheet. Okay, 32,600, and that is our ending cash balance over here in our statement of cash flows of 32,600. So you can make sure that you completed your statement of cash flows correctly by comparing that ending balance number with your balance sheet cash amount reported. Okay, so the statement of cash flows, 3 sections: activities, operating activities, investing activities, and financing activities. Okay, make sure that you look only at the transactions that affect cash. That is what we're interested in. Okay, now these are the 4 financial statements. I hope that this lecture has helped in you better understanding how to prepare each of the financial statements. If you have any questions or concerns, do not hesitate to reach out to me. Please refer to your syllabus for my office hours. I look forward to seeing how you perform on your assignments. Remember that you have 2 attempts and the highest grade is always retained. Please make sure that you review all of the resources, the textbook, the PowerPoints, my lectures, and the show me how videos that are embedded within your actual homework assignments. Okay? Please organize your time to make sure that you are able to complete your assignments within the established deadline, as no extensions or makeups are granted. Okay? So that is it for Chapter 1. I hope you have a wonderful rest of your week, and until next time, thank you.